previous presentation, I've talked about bringing unadjusted trial balance out from the Cashbook spreadsheet that I've explained. So when we brought this one out, this is something that looks like this. It's kind of a raw data. However, we really wanted to transform this unadjusted trial balance into something that looks like this. So this PDF here is an example of such unadjusted trial balance. We input that into a trial adjusted trial balance in a separate spreadsheet, which I will explain. And then from there, we're going to generate a sort of report, which called SME IFRS for SMEs. So we know that IFRS can be for multinational companies as well as SMEs. So the SMEs one is a bit simple and it's a bit friendly, and the IFRS for multinational companies, they are quite complicated, but we really don't need to dig into that. What is more important is that, sometimes new entrepreneurs as well as SMEs, they've really been beaten down by the regulators, such as the tax office or such as the money laundering, anti-money laundering offices. They pressure them to do reporting that are compliant to international standard, and as well as they really wanted them to be compliant to reporting within the country. And also financial institutions would like them to produce financial statement based on IFRS expectations. So here, if we translate this unadjusted trial balance into something that looks like this. This is an example of a trial balance. This is the spreadsheet which I call financial statement presentation. So this spreadsheet, as well as the previous one, I will be putting that down there after this presentation so that you can download it for your own use. What is important, as I've emphasized in my previous tutorial, I've said that this course is suitable for trained accountants, certificate in accounting and above, because they can be able to translate this unadjusted trial balance into something of a adjusted trial balance, because adjustment on its own is a huge area in the field of accounting. So if we look at this unadjusted trial balance, which we extracted from the Cashbook, which is accurate based on the completed bank reconciliations that we've looked at into the previous lecture, which is this one. If we look at that, this is an example of an unadjusted trial balance. If we move this trial balance into the spreadsheet that's readily available for us to transform into IFRS for SMEs, what is important that this unadjusted trial balance does not capture assets, liabilities. So here, what is purpose for adjusted trial balance is to include and make adjustments for something that are absent from the unadjusted trial balance. So here, for example, we can insert the assets as well as the depreciation, and we also can make the adjustment and incorporate accounts like something similar to this one they call distribution cost. So distribution cost can be part of the depreciation cost can be part of the distribution cost. In this cost, you can be able to do the adjustment and enter these accounts here. So if we look at the trial balance and the unadjusted trial balance, we talked about that the debit nature accounts like assets and expenses, they are counted as minus. Here, when you enter that into this worksheet, you have to change all the assets into positive figures as well as the expenditure, because they are both debit nature accounts. Now, cost of sales, as you know, you can calculate that outside of this trial balance. In a separate spreadsheet, we know that cost of sales, the formula is opening balance of goods plus purchases for the year and minus the end year closing stock of goods. Then the answer would be the cost of sales. So sometimes they refer it to as cost of goods sold. So whatever means, this is the formula. So it has to be calculated outside of this in other separate, like I said, in your adjusted trial balance, and from there you can translate or transfer that into this worksheet. So this worksheet is where you play around with. So it's called trial balance import. You bring it an adjusted trial balance and play around here. Or if not, you adjust your information in a separate worksheet, and you feel that it's available it's readily to be transferred here, you can transfer the information here. But what is important is, this is a very comprehensive one. It caters for information like raw materials, work in progress, and finished goods. What is important is that some of the entrepreneurs, newly operated entrepreneurs, they have less payables and accounts receivable, as well as assets and liabilities in common. So because of this, you can be able to quickly adjust and then put your trial balance here. So if we, for example, if we copy this here, this whole information here, and bring it here, it will be not balanced. The reason is that some of the accounts are still yet to be adjusted. So for example, your fixed asset register, it has to come from the worksheet that I've explained in another lecture. So once if you do it wrongly, it will give you balance that is not balanced. So if, for example, I change 8 and 9 to 8, so if I enter, say you have 100,000 error. So you keep your unadjusted balance, keep adjusting until it's balanced, until it incorporates all of the information. And once they are done, and it's balanced, and you feel that, okay, these are all done, then you can transfer this whole data here. You can transfer, just copy and paste this one into your trial balance. So this is the central balance that we talked about here. It's been transferred here as 2016. So from here, you can be able to translate into this format. This is the format I was telling you about, the format on this period. So what is important is that this page AFC here, it's accounting financial statement. You are not going to touch anything in this here. This is auto spreadsheet. Once you are done with your trial balance, once you are done with your trial balance import, and then you copy that into here, into this page, that's it. It's all over. Everything can be calculated auto from here. But before they are calculated automatic from this sheet and give you the spreadsheet and give you the IFRS financial statement, you need to at least do some few adjustment. For example, go to set up your company, give your registration number, where is your company located, the street number, the country where it's from, the currency, the month that your accounting books will be closed and do reporting, what's the reporting year, and then the number of pages that you like. Sometimes financial statement can produce more financial information, but they are empty because, for example, if you don't have things like goodwill, or if you don't have things like contingency assets, they will be actually removed. So let's find contingency asset. So if you don't have any contingent liability here, so what is the use of having note 21, for example? So you can able to to eliminate or remove it from your spreadsheet. So this is what it means. The 12 pages covers things like this, contingent liabilities. So here, for example, the 12th page here can include some information that you really don't have. Just an example, not 21, or other reporting events after the financial statement. So if they are not there, we can also remove the related party, for example. So these are the kind of things why we say that yes, it's 12 pages, but what's in 12 pages? So do you set up here? Again, don't touch anything within the blue. They are already formatted. And then you go to your class. The class need to be understood. It's actually the class of accounts. For example, what are categorized inside a financial statement notification? These are all your revenues here. And then followed by cost of sales. I have explained already cost of sales as well as the distribution, cost, advertising and marketing, cost, administration, and other expenses. So here, from here to here, they are the expenses that you are paid up. In other words, these are the things that will appear in your financial statement. Let's get to your financial statement. So this, it will appear like this. This is how it will. So distribution cost, for example, it's actually derived from here. Distribution. It's actually derived here. So those who study accounting, for example, they know what is advertising, what is marketing. Every cost that associated with marketing and advertising, they should come together. Every cost that related to distribution, for example, the cost of making products available, the cost of transport, the cost of to market the business out, to achieve customers, all these related costs that will allow you to reach customers. These are the distribution costs. Administrative costs include salaries and others, depreciation for assets, that's house, factories, and administration. But here could be depreciation for vehicles that involve the distribution of goods, as well as fuel and all transport related for distribution. And if any cost that is not within this three costs, you can able to put into other costs. So these are the type of things that you have to dig in and then look at. And then the other one is your balance sheet account. Have a look at them. It's quite lengthy, and also you can also remove some of them. But as I said, this spreadsheet, it's a standard one, but for newcomers into the business, some of these accounts are not relevant, so you can be able to get rid of them in your spreadsheet here. So that is the classes. So when you finish your setup, move to classes. Classes sets what will appear in your balance sheet, what will appear in your equity, what will appear in your liabilities, and what will appear in your assets. That includes fixed and current assets, and what will appear in the expenses as well as in the revenue. So it covers the entire balance sheet. So once you have the classes there and you understand the classes, these are the numbers that you play into your financial information, financial statement. So you need to understand this one. After the setup, understand this one, and then this knowledge that you gain from these classes can be able to handle the trial balance. But again, a financial statement needs other information. So other information would be, when would be the financial statement be approved and released? So you can put, for example, if your financial statement closes around 30 December, most jurisdictions, they allow 3 months for financial statement to be produced. So you can say that or at the time before it's released to be approved by the board of directors or by the GM, or to be released to the regulators, you can put the date here and then print the financial statement for signing and so forth. If you have financial leases, put the leases here as detailed here. If you have interest received, put the interest received here. Remember, these are additional information. This information that you inserted here, they are already in the trial balance, but they are inserted here for the purpose of notes into the IFRS SME statement. So what is important to get into the interest received, for example, it's important for financial cost cash flow. So if you go to, somewhere around here, it should be financial cost, it should be found interest received, for example. So if we go to if we go to other revenue, go to 3, for example, not 3. Okay, let's quickly go to not 3. If we go to not 3, so if we go to here, this this 5,000 here, this 5,100, it's also part of this part of this other income. This why, I said again, why is it we need financial information? Is that, as I said, these numbers have already loaded into this information. For example, financial cost, these numbers have already been here in this other expenses, as well as interest paid. So these numbers are already in, but they need to be specifically injected here so that they can pick out from the financial statement. So as I said, 516, this is the 516, but then this is for the cost. If we go to interest received, 5,100, it should be interest received, it should be here, 120 other revenue, as well as this one. We should be able to find it in the cash flow. So yeah, somewhere around here we can find 510 interest received. So this is 510 interest 510. This one, 510. So what is important? I said again, what is important for this financial information is the distribution of these numbers into these notes within the financial statement. So they have purposes to do this stuff, because you enter this, they will fit into the notes of the financial statement. So same with everything. So this is the template. We just need to put in the information that we actually get for the year. So for example, I've talked about new loans. So if you have a loan, inject the loans there, because the loan is also adjusted, appear in the adjusted trial balance, and it's also part of the liabilities. The liabilities. Somewhere around here. So the loan should have been injected here. 20,000 should be inside here. So why we need to put in here? Because it's a new loan for the current year. So it's definitely around, what is this? 110. So 110 so far already there. So it needs to be at least updated. So the kind of information that needs to be captured in the financial statement. So you can have a look at it, get rid of what you don't want, but you can put in things like shares. They are very important, the shares. If you don't have shares, you can put the number of amount that have been agreed by the company to start off, by the directors to start off the company. So if you have leases, whether the lease is greater or more than 5 years. So these are the things that you need to put in place, and other provisions. Remember, you have provisions for leave claims and so forth. So this is the guide. As soon as we start loading information here, they will be automatically picked up here. So remember, when you do your Cashbook recording, this Cashbook recording is actually deal with information that is coming out from your cash account. It doesn't involve liability, establishing liabilities. However, liabilities can be reduced. If you want to include this balance sheet accounts, you can. But I think for a start, in this case, I think you need to do the adjustment out. But as you get into and familiarize with this spreadsheet, you can be able to load into your assets and liabilities here, and then that should be able to reduce the type of adjustment that will be made here, as well as the one that I recommended for you to do the final adjustment, and before you transfer them here as well as here. So once you finish your trial balance, you finish your setup and familiarize yourself what accounts that need to be there and removed, and then going in this area, you have to go line by line. Again, this information are acquired from the disposal. This one, I want to talk about this one. This one have been acquired from the fixed asset schedule that I have explained. So these are the things. If they are zero, you just need to put them zero. If your financial statement or your records do not reflect these changes, you just put it there. Others, for example, you don't have probably trademarks and goodwill and so forth. So these are the kinds of things that you need to decide as an accountant. And then that's it. Play with it. As long as you finish with it, the data will come up. So let's check contingent liability. So yeah, with this sort of data, okay, contingent liability is actually on cell 536. From top to bottom, there are things that you need to go through and look at them if they are still current or they are still relevant. So, for example, whether contingent liability is still valid to be there. For example, during 2000 or this year, this particular year, there's customer initiated proceedings, or there could be a court case in place. So you have to go through it and make an adjustment on your spreadsheet here before you finalize it. So see, you have events after the reporting period to adjust. If you don't have, just get rid of it, or you just hide the sheet. This is the way you hide the sheet. Yeah, hide the sheet. This one you can use to hide the sheet, and then yeah, that's it. So a lot total. Your related party disclosure. This is where you can put your disclosure for related parties. So my point is, there are other notes that are automatically picked up from this trial balance as well as the financial information. But there are like for example, like this one. It can be picked out from financial information as well as the trial balance. But for contingent liability 21 and 22, look at it. It needs some adjustments. So it's information you have to go through each line by line and then have to justify for the things that need to be adjusted. Otherwise, the rest of the notes are picked up from this trial balance as well as the financial information. And there is another thing I need to be changed. Not, I guess it must be not one. Yeah, Also, remember I've explained other presentation on my fixed asset. Update this percentage. Many companies, they have different rates. You can do the adjustment, or different jurisdictions, they have different rates. You can also adjust this. And there is another thing that I really want to touch. Yeah, this one. Pacific Forensic Accountants Limited, the principal activities are manufacture goods and services. You can change this line if you like. Principal business activities is you can change this line. Just highlight it here and change over here. This address is automatically picked up from the setup. So these are the kinds of things that you need to understand what's actually going on with your spreadsheet. So when you are done, it can take you less than 2 weeks to compile the thing. Most jurisdictions, they allow 3 months, others they allow 9 months to prepare financial statements. So if you look at these, everything adjusts there. It's just up to you to keep recording your financial Cashbook spreadsheet, and then when that's done, you can do adjustment within a few weeks by a few questions to your manager, or if you are the manager and accountant, you can do both, and then you do the submission of financial statement. And so when you print this out, you can be able to say that it can be done within a week. Then when you finish this, just an additional point, when you finish this, remember this approval date. As I said, it's captured from this financial information. This financial information here, these dates here, 20 March 2016. This one. So my other point is that, remember, when you finish this is actually a financial statement. You need to print whatever cover note to go along with the financial statement, transmittal letter, as well as the highlights of the financial statements, if you like, and also space for your performance of the financial statement, and as well as 1 page allowing for the director or the general manager or whoever, the owner of the business, to sign off the accounts. And yeah, that's it. And thank you so much. There's something that I forgot to mention. Like, if you have finished checking all the sheets and the pages as well as the document, if you feel that it's okay, you can also transfer, or you can receive this one to PDF. So if you can press Save As, and then here you have the option to look for PDF. So if you look for PDF here, yeah, that's it. If you click it, then it will give you the options. You can save the authors if you like. Then you press Save. If you press Save, it will take you directly to where it's gonna be saved. So rename the file to 1 something, and then you press Save. So once you press Save, it will go to the saving folder. So when you finish, we go to the saving folder and click this the save file. So you open the PDF, it will show the same document. So this is definitely when the PDF is extracted from the Excel document. So this is the last part that I forgot to mention. So I think this is done.